Imagine waking up tomorrow and finding out that some of the most valuable companies in the world just lost 50% of their value. NVIDIA, Microsoft, Google, Amazon, Meta. Not because artificial intelligence stopped working, but because investors finally realized something critical. Maybe they paid too much for the promise of the future. Does this sound familiar? In the late 1990s, the internet was changing the world. And it really was. But that didn't stop the dot-com bubble from violently bursting. So we arrive at the single question that could define the next decade of finance. Are we looking at the greatest technological revolution of our generation, or the biggest financial bubble since the internet? Today, and we're going to find out. When someone asks, is artificial intelligence a bubble? There's a problem. The question itself is wrong. Why? Because a technology can be completely revolutionary. And at the exact same time, the investments around it can be in a massive bubble. The internet wasn't a fraud. It changed everything. But that didn't mean every company that put .com in its name was worth billions of dollars. That distinction is fundamental. Artificial intelligence might be in the exact same position. The technology can be right, while the price is completely wrong. To understand the size of this bet, we have to look at where the cash is flowing. The world's biggest tech giants are spending hundreds of billions of dollars on physical infrastructure, data centers, GPUs, power grids, chips, and the massive networks needed to turn AI into a real profitable business. Google, for example, projected up to $185 billion in capital expenditure for 2026. Meta projected up to $135 billion. This brings us to one simple, unavoidable question. Who is going to pay for all of this? Building a data center is easy if you have the money. The hard part? Making that data center generate enough real revenue to justify the investment. Imagine you build a $10 billion factory. You expect it to make money. A lot of money. Now imagine you build 10 of them, then 100. But your customers still aren't paying enough to cover the cost. You can have the most impressive technology on Earth and still go bankrupt. This is exactly the concern that's starting to show up in the AI debate. Not necessarily because demand disappeared, but because the market needs to find out, how much money can this revolution actually produce? Now we have a problem for the bubble thesis. Because when you look at some of the companies at the center of this revolution, the numbers are absurdly real. NVIDIA reported $81.6 billion in revenue in just a single quarter, up 85% from the previous year. Its data center division alone generated over $75 billion. That doesn't sound like a company living off hype. It sounds like a company selling shovels during the ultimate gold rush. And here lies the biggest difference between the dot-com crash and today. There is real immediate demand. Companies are actually buying the chips. Data centers are actually running. Models are being used, and users are paying monthly subscriptions. So, how could this possibly be a bubble? Here's the point most investors miss. A bubble doesn't mean this technology is useless. A bubble means this technology is amazing, but the price we are paying assumes a flawless, perfect future. Pay close attention to this distinction. Imagine a company that will eventually earn $100 billion a year. If you buy it today for $500 billion, that's a great investment. But if you buy it today for $5 trillion, it's a disaster. The business can be great, while the investment is terrible. That is the fundamental difference between a great company and a great stock. Let's rewind to 1999. The internet was growing rapidly. Companies were laying down thousands of miles of fiber optic cables. Investors were convinced the world was changing, and they were right. The problem? They paid any price for any internet company. When reality hit, thousands of businesses disappeared overnight. But notice what happened next. The internet didn't disappear. It grew even bigger. Amazon survived. Google was born. The technology kept advancing. The bubble burst, but the revolution continued. And that teaches us the most important lesson for the AI era. Maybe the biggest risk isn't that artificial intelligence is going to fail. Maybe the real risk is that AI is going to work, just not as fast as Wall Street expects. If the market expects AI to generate trillions in profit over the next 3 years, but it actually takes 10 years, The technology still wins, but the investor who overpaid today loses fortunes. Because a stock's value doesn't just depend on how much a company earns, it depends on when it earns it, and how much you paid to get in. So, is AI a bubble? The answer isn't a simple yes, nor is it a no. Artificial intelligence is a genuine revolution, but some companies are being valued as if their dominance is guaranteed forever. Some will dominate, others will completely vanish. The good news? You don't need to predict when a market crash will happen. You don't need to guess which stock will go up 500%. And you definitely shouldn't bet your entire net worth on a single winner. Investing isn't about predicting the future. It's about building a strategy that survives any future. Is AI a bubble? Parts of it almost certainly are. But the core technology itself? Probably not. And that might be the most dangerous part of all. Because history shows us that the biggest financial bubbles don't come from bad ideas. They come from true ideas taken to extreme excess. The internet was real. The technology was real. The revolution was real. But investors still lost fortunes. Don't focus on figuring out if the revolution is real. Focus on figuring out how much you are paying to be part of it. And that distinction could be worth billions.